Welcome back to the Two Regular Guys show, part of the Best of US subscription. We're today going to get into last week and what happened last week, which was a crazy week. We're going to talk about Bank of America's position on the recession, along with retail layoffs, which is starting to happen a lot now. And then we're going to get into the charts and break down some of the big boys and what they're doing and what we see coming in the future. So stay tuned. All right, Mark.
All right. It's Two Regular Guys on a Monday morning. It's Monday morning, August 12th, when we're doing this particular video. So we had a nice, interesting week last week with the big Black Monday phase two, I guess, where the market Dow fell over 1,000 points and slowly worked its way back, up as reports came out about different things such as jobs reports, which countered the other jobs reports. And it's really a mix up of, what you want to believe and what we're seeing out of the, the reports we're seeing and the earnings that we're seeing. But, when we look at earnings, okay, some of America's biggest companies like Amazon, Disney, Yum Brands are saying that their customers are increasingly seeking cheaper alternative products and services, searching for bargains, or just avoiding items they deem too expensive. Remember, just go look at all the earnings reports, and I think it's like a record high where people are talking about the consumer cutting back since the pandemic. It's a record high in the announcements in those earnings reports. So the consumer represents 65 to 75% of our economy in this country. So if they're cutting back, eventually the economy is going to reflect that. Okay. And that's what we're seeing in the earnings reports. And I don't care what, later on this week, we have the CPI and the PPI, and then we have retail sales. Now, if you believe, I'm becoming skeptical on if you can believe that on these government reports, because they don't seem to match what we all live with. I mean, I don't know about you. You must, I think you're positive on it, aren't you, Trent?
What's that? Positive on the economy?
You're all in on those government reports.
Oh yeah, they're 100% accurate. All truth, whatever.
I think it's weird. Yeah, and so what? There's kind of a fight between what's causing inflation, and I believe inflation is being caused by all the spending and the liquidity that the government's putting into the economy. And there are some in the government that believe it's not that at all. What it is that's greedy corporations raising prices, And I just saw that the head of the Federal Trade Commission wants to investigate whether grocery stores could do more to lower prices for Americans, as many shoppers continue to be shocked over their food bills. Well, okay. So, do you think, go look at Kroger's, earnings report. Go look at, all the Albertsons, you can figure out what's going on. Okay. There's more cash strapped on the amount they're paying for their foods and processing. And it all comes down to really energy. Okay. If I'm a farmer and I have all my fuel costs are up, my insurance costs are up on crop insurance, labor cost is up on running these machinery. The cost of equipment is up. If everything's up because it's inflated, and I have to pass that on, it's just going to be passed on, and that's what happens. Everything gets passed on. If you tax a business, who's going to pay for that? Us, the consumers, are going to pay that tax. Okay, and that's just the way it is. So to go out and blame, I'm not saying that there's not any price gouging, but I don't think in this time you're looking at companies now like McDonald's trying to do $5 meals and trying to bring the prices down because they're losing customers, and that's called demand destruction. And that's what gets rid of inflation, is demand destruction. But even though whatever you think, whether you're in a recession or not, and I believe we are in a recession for majority of Americans who live paycheck to paycheck. I saw that this week. Brian Moynihan, he's the CEO of Bank of America, said that the financial giant no longer believes a recession is on the horizon for American companies. Our team, a great team at Bank of America Research, does not have any recession predicted anymore, Moynihan said. Last year, this time, it was recession. Now, no recession. So I don't know where he gets up, what great team he has. I'm not on that team, obviously, because I think we're in a recession because I live in the real world. Okay. And I think you probably see the same thing I do, Trent.
I agree. In my opinion, we are in a recession. I see the real consumer not spending as much. Um, Ginger and I went to lunch yesterday. We hadn't done that forever. And we went to our favorite Mexican place. It's reasonable usually. I can eat for about $9.99 for three cheese enchiladas, rice, and refried beans. And they raised the prices $2, $2. So it's now $12.99. And so our bill was more than what we're used to. And it's like you're looking at it going, I know why they raised their prices because of the cost of all that makes that dish went up in price, and they have to reflect it. It's not because they're gouging me. It's because the cost of them doing business went up, so they just pass it on to me.
It's
And
called the market. Yeah, the free market. Yeah.
yeah, and so you think about last year, I think what was it? California raised their minimum wage to like 15,
$20. Yeah.
$20.
20 for fast food restaurants.
Right. Where do you think that's gonna like flow into? That's gonna flow into the cost of the
The burger.
product they sell.
Yep.
That's just how it works. Because the business owner is not gonna say, oh, you know, the salaries just, the hourly wage went up $5. I'm going to absorb that. No, that isn't how this works. And honestly, when I saw that with Bank of America making that statement, I'm like, they're on the opposite side of this. They've got a
Yeah.
trade that they've been building for a while, and they're positioning, and this is their analysis of a recession. And so when it happens in a big way, they're going to profit from it. That's what these guys do, you
Yeah.
know?
Most likely.
Yeah. And so when I hear that, I'm just like, that's just, you don't, first of all, don't live in this world. You live in a $50 million a year world where
Yeah.
nothing is costly.
Yeah. It's private jets and
Yeah.
meals paid for and cars picking you up and taking you to work and yeah, things that we all experience, right? Yeah.
Yeah.
I
And I
mean,
think,
just look around. I mean, the cost of everything's going up. We talked about car insurance, home insurance, property taxes, all these things that are going up
yeah.
beyond people's salaries. On top of that, look at the layoffs we're seeing. You know, Cisco, Dell, all these layoffs all over Amazon, Microsoft laying off. Okay, plus the little companies laying off.
Right.
So, but do we see headlines that, XYZ companies hiring 25,000 people this year? No, I haven't seen any of those.
No.
And so what do I see? I see companies that can't afford that don't have customers anymore because they're not spending, going out of business or cutting back. Specialty flooring retailer LL Flooring on Sunday, yesterday, said it had commenced Chapter 11 bankruptcy proceedings and will pursue a going concern sale of its business. LL Flooring is one of the leading U.S. retailers of hardwood surface flooring with over 300 stores in the country. Okay. Walgreens announced the company planned to close about 700 branches throughout the country because of inflation costs. Since the start of the year, consumers have shown more caution when spending their hard-earned money. The rising inflation has affected many households. Stores like Walgreens have seen a drop in sales. Family Dollar, okay, not exactly a high-end store. That
No.
these are stores that people go to when they need and they can't afford anything else. Facing substantial downsizing, planning to close over 600 stores by the end of this year. This reduction represents about 10% of its total locations, directly attributed to persistent inflation, which has notably affected its core low-income consumer base. Applebee's will be closing between 25 and 35 restaurants this year. The Body Shop has shut down all 61 of its U.S. locations following a March bankruptcy filing. CVS announced a strategic reduction plan aiming to close approximately 900 stores by the end of 2024, which is about 10% of its nearly 9,000 stores nationwide. Macy's is closing over 100 stores, significantly cut, giving to its roughly 550 total locations. Rue 21 is closing approximately 700 stores following its third bankruptcy filing in 20 years. Pier 1 Imports have closed all of its stores as a part of the bankruptcy proceedings. At its peak, Pier 1 had over 1,000 stores. And J.C. Penney is closing 154 stores as a part of its bankruptcy restructuring process. So if we're not even close to a recession, I don't know why we're laying off all these. What are these people going to do? Okay.
Yeah.
Every store that closes, people work at those stores. They got to go find another job. Are we seeing all the jobs out there? No, they're having a harder time finding a job. How am I going to make my mortgage payment? Everything's already sky high. I've already blown my savings account out and I've taken my 401k and I've borrowed against it. I have nothing left. How about a HELOC? Let's do a HELOC. Let's go back to the 2008s and we'll take out a loan against our house and just really, mess up the rest of our financial
Really
future.
bury ourselves.
That's where
Right.
we are. And
Yeah.
so you go ahead, Brian Monahan, tell us that, as you sit in your ivory tower, wherever your headquarters is, that there's no recession coming. I think it's here, buddy. It's just not in your world.
Yeah. I think
There's my
and
rant. That's my rant for the day.
no, and honestly, it's a rant that we've been sort of pounding the table about for a while now. And I think we're starting to see more and more of it, more and more of it come out in the open within the stock market, within global markets in general. And I think the more and more um, this economic events comes to the surface, the more and more it's going to translate into stocks and people's 401k plans and that kind of thing. And it's just unfortunately it's just the reality we live in. It would just be nice if somebody just say, this is really what's happening. Is here's what you need to do. And I think that's what we try to, teach is look at it from a zero motion logical point of view. If SMCI has dropped 40% since March, why has that happened? It's because there's no support there. There's no liquidity to keep it up. Chances are it's going to keep going down, especially if the economic numbers, eventually bleed into the stock market. And I think we saw a lot of that last week and earlier in the week when the Nikkei blew up on Sunday night, and that translated into what, since I think 2022, the biggest sell-off we've seen in one day. Now, granted, everything sort of recovered throughout the week, but is it a tale that will keep on telling here in the coming weeks and months ahead? My thinking
And
it
it's,
is.
and it's not just a US thing that we found out last week. It's a global issue. Okay.
Oh yeah,
How tightly interlocked we are financially with derivatives and overnight borrowing and repos and all that stuff that we don't even care. We don't know about how deep it is, but it's the same stuff that got us in 2007 and 2008,
yeah,
and it's back with a vengeance. So just be careful out there. That's why we swing trade. That's why we watch closely the markets, and we don't want to be caught with our pants down and get into a 13-year situation where we're behind and our opportunity costs are gone. I mean,
right.
I just can't go through that with anybody again. We've lived through it a lot. I'm not gonna live through it again. And for those who want to know, what our thoughts are, that's why we have the Platinum Channel.
Yeah, I think so. And I think, the more and more as this goes on, the more and more we're gonna see refinement in Best of US Investors and more create more teachings about how to really truly look at how markets really work and how institutions really view markets versus us, the individual investor. So
Absolutely.
yeah.
Yep.
So you want to get into some charts?
Yeah. Let's look and see what we're doing today on Monday.
All right.
Nope. Anything come up? Oh, there
Yep.
it is.
There it is. SPY.
Okay. SPY. So this was last Monday, a week from today. You see, we had the big drop. This was Friday. Gap down, gap down. Well, we filled this gap back here in these last 5 days. Today, we're above the 9, okay, and we're touching on it. We'll see if we close above the 9. That's positive for the market, although the MACD isn't back up above the signal line yet, and we still have an RSI under 50. So we're seeing an upward trend to a degree, and we're getting back above the 9. We're still above the 200, which is good. Above the Bollinger Band, the lower, which is curving back around a little bit. We still have some resistance at the 20. And we have a green line of death, followed by the 50 right here. So we're going to have some resistance on the top side, but that can be expected. Qs. Look at the Qs. Same thing. You see, we came back up today. We're above the 9. Okay, you may have a little more potential if this closes above the 9 today. We can get the MACD above the signal line. They have a good stochastic movement. Got to get a little more momentum on the positive side. I mean, this could be a potential swing trade in the Qs coming up based on what the chart's showing us.
Mm-hmm.
And again, we just look at charts, okay? And let's look at the Dow. Dow again, look at the 9s just screaming down on the Dow. But
Yeah.
we have traded up to it, but the 9 and the 50 are providing a little bit of a resistance level, and it has been over the last 4 or 5 days, and we're still below it now in the Dow. The MACD is still down. We still have a pretty low RSI. So again, and then we have the green line of death, which is the intermediate resistance level right above. So this is not something I'd be interested, as far as being in the Dow at this
Mm-hmm.
point. Let's look at I'm going to go back to the SPY a little bit. We're going to go look at a chart we always look at and just see what's happening. You can see we were on an uptrend. Okay. The yellow is the Dow. The blue is the NASDAQ, and the red is the S&P. You can see where we are. We went through, this was the last week or two, made a little W here. Again, we've come back up and we're starting to roll over just a tad bit. You're seeing the MACD is turning around a little bit, okay, like we saw in the SPY. It hasn't crossed yet. So we'll see what happens. But it's turned around a bit, and we'll see if market momentum can keep us rolling. Let's look at some of the let's look at the Mag 7 while we're here. And we'll start with everyone's favorite, NVIDIA. And you see what happened in NVIDIA. This is going to be probably a close above the 9. It's above the 200. Okay. We haven't quite got a crossover on the MACD yet. We still are under the 50. So we got some work to do, but it's turning around. We've had a long rolling downtrend, went sideways, and now we're seeing it turn a bit. If we can get some of these oscillators to work our way and stay above this 9. You can see we went up resistance at the 20, 9 to 20, 9 to 20. 20's been a resistance level when it's tried to pop over the 9 before. So we'll see what happens. We have a little more room up to the 50 if we can continue to go on NVIDIA. Apple, same thing. Apple's come up. Look, it had resistance at the 50, 50, 50. Crossed above a little bit today, where looks like we're going to get a full candle above the 9 and the 50. Okay, which would be a good sign. We still need some confirmation down here on the MACD, and we do. The RSI is above 51, so Apple's showing a little strength. Watch out for this green line of death, which is our intermediate resistance level. You can see we've had some trouble before getting over that. So we're starting to see more positive. It took 5 days to get back. With a little more positive charting technical analysis on these charts. Microsoft's had some trouble getting above this 200 over the last week, but today it's over the 200, and then we have a death cross of the 9 over the 200. Really narrow bands between the intermediate support level and the intermediate resistance level. So keep that in mind. And again, the MACD is still negative. And we have an RSI at 37, which is pretty weak. So not seeing the same momentum and strength, even though we're seeing a little bit of upward price trend, but that, crossing the 9 is still trending down. I'd like to see that curve back up just a tad more than what it's seeing right now.
It's important to know that this is being filmed at 11:45 a.m.
right
on Monday.
Right.
Anything can happen between now and the end of the day.
Well,
so
by the time you see this, yeah, definitely. Yeah. Tesla just go ahead.
No, go ahead.
You're right. This could all change, but this is how we see it today, and that's how we look at it on the Platinum channel. Tesla is just having trouble on this 200. Okay, it's just sideways. Yeah. Now, what's going to happen is see the 9s coming down like Microsoft, and it'll probably at some point, if we continue to see this sideways pattern, price will get above the 9, but we're going to want to see that 9 come around again. And again, you look down at the MACD is not where we want it to be. We're at 40 on the RSI. It's just been a hard road here to get across this 200. 200 can present a really good line of resistance. It takes a while to get past that. So Tesla's still sitting there, not doing much for us. Amazon's the same as Tesla, just trying to get past this 200. Again, here's your 9 screaming down, death crossing today over the over the 200. So if this continues, we're seeing a little bit of an uptrend. We'll probably see Amazon cross over the 9. But we'll still have that downward trending. Got to watch the MACD. Look at these little candlesticks too. I mean, from open to close, it's pretty narrow.
tight. Yeah.
Yeah, pretty tight. Yep.
Huh.
So there's some indecision out there on what's going on. Google's, I mean, they're all looking the same, except this one is above the 200. So it came back within its Bollinger Band for the last 4 days. And now we're seeing almost trying to get across. It's not there yet, across the 9. And we're seeing a little bit more of a swing up on the MACD, but it hasn't crossed yet for confirmation. But this could be a candidate at some point for a swing if we can get a little more strength out of the RSI and get this MACD crossover. And then we have
it's interesting how they all sort of look the same, except for Tesla and a couple others.
Yeah, and you know, you look at the S&P and the Qs, it's the same because these guys are such heavily weighted in both of those. So Netflix, this was actually on our watch list this morning. Netflix, now it's had 3 days over the 9. It crossed over where it was resistance at the 20. We're still above the 20. We're above the 200. We're seeing the lower Bollinger Band come up a little bit. We've got it's 50 in the green line of death up a little bit. So we have a little bit of room before we get to resistance. So MACD is positive. The only thing that's a little off is the RSI, but it's almost at 50. It's at 49.47. And we have a positive stochastic. So Netflix is another one that's come back and shown us a little bit of a reversal on its price. Let's go. You mentioned SMCI. Let's see how they're doing this morning. Oh, see now, we're seeing kind of the same thing. So we come down, look, sideways pattern for 4 days. It came back within its Bollinger. The 9's coming down. It is under the 200, so there's a big line of resistance there. Plus the 20 has death crossed it. The 9 has death crossed it. And we're seeing a little bit of a turnaround in the MACD, but not there yet. So maybe we're coming up to a point, in the next couple of days where we'll see SMCI turn around. But right now, it's not there. It's not ready for a swing trade yet.
Yeah, you're seeing that. What is your 9-day? Is it comes up against it, and then pulls back from it, and chances are you'll see a challenge maybe there next couple of days of a breakthrough, maybe an opportunity, but just looking at it, it's like just be patient. Let it come to you, instead of you coming to the market.
Absolutely. There's no reason to be in this at this point on a swing trade position, in my opinion, based on my trading guidelines. Now, if you have different trading guidelines, then it might be that you just trade off for some reason just the Bollinger Bands, and you would say, okay, I'm back in, but that's just for whoever just trades Bollinger Bands. Okay, I try to look at everything to make the best probability of a good trade based on 4 moving averages, Bollinger Bands, and 3 oscillators. Let's look at the long-term Treasury. So here's your TLT. TLT came up, gapped. Look at these gaps. This is just crazy. And you got to know when it gaps up like that, you're gonna run out of steam, and that's what happened. It ran out, came back down, and now we're hitting the green line of death. The 9's come up, and you can see we're squeezing. We'll see if it pops up or down. Right now, the MACD is still positive. We're seeing positive on the stochastic, and we're at 60 on the RSI. So it's got to get past this green line of death to continue on its upward track. We'll see what happens. But there's a lot of gaps. There's a lot of gaps to fill.
Yeah, and it's like you said, there is that resistance there that would stop it. But when I look at the 10-year weekly on the 10-year Treasury yield, it is as well. It's actually trading below where it closed on last week on a weekly chart. So who knows that a power move could happen with 10-year yield going down and TLT moving higher. So they're oppositely correlated.
Yeah,
So we could see something
here's our
there.
weekly here. Yeah,
Yeah, but just be patient. That's the trick.
yeah,
Yeah,
yeah. There's no hurry in this, and really good traders who actually, or and investors, are very patient. Okay,
yeah,
they don't have to be in the market every single day. Uh, they can be patient and move the money to where the value is. And sometimes the value is sitting out and waiting, okay, for the market to come to you. Why would I want to risk any of my money on a market that's not working for me, okay, or a chart or technicals that aren't working for me?
right. Exactly. Exactly. Cool.
Uh,
What
Here's
else?
Palantir, okay. And at one time, Palantir had a green line of death here. That's why I made these boxes. But now the green line of death is gone, and we're seeing it follow up uh, the upper Bollinger Band on Palantir. Got a MACD crossover positive. We're at 62 on the RSI.
Mm-hmm.
Uh, we'll see. We have a little bit of a pullback today, but it's still following the upper Bollinger. We're not embedded yet in the stochastic, so it can pull back. So there's a lot of room to come back to support where you're seeing resistance here on the upper Bollinger Band.
And just that one candle, if we were at the close of the day right now, that red candle with the big top wick, that would, in my opinion, be an indicator of, this is running out of steam,
Yeah.
this move. So expect a pullback of some level.
Yep.
Yeah.
There's quite a big gap here too, so
Mm-hmm.
that's down around the 50, and here's where we move this up a little bit above, see where the cells are. Yeah, cell levels right above the Bollinger. You can see it wicked right up to where the cells are and came
Mm-hmm.
back down. So
It is just amazing to me when you identify where the basically the liquidity is, or the sell and the buy support from an institutional or commercial investor level, how accurate it comes right to that line and then just pulls right back.
it
You
is
know,
amazing.
it is just, it's like it's predictable. I mean, I hate to use that word predictable, but it's predictable once you understand where the commercial, and the banks and the hedge funds are, where they're positioned and where they profit or where they enter. It makes identifying where to buy and where to sell.
Yep.
Yeah,
This
pretty
we put on the watch list this morning. This is USOA, United States Oil Fund,
okay.
and put it on because it's above the 200, and we had a full candle close Friday above the 9. It had a little resistance. You can see today it gapped up above the 50, and it's closing in on our green line of death. So that one did pretty well.
Yeah.
Um, let's see what other ones we had on.
Here,
Well, we had,
here, do this, Mark.
yeah,
Go back to like um, May 28th area. And if you sort of draw a line, I think that's right back on the left side of your big yellow box there.
yeah, it's right,
Right there.
right
That
here.
yellow, yeah. You
Yep.
draw from the top of that all the way across. Your blue line there would be it. Is that
This one here.
purple? Yeah, no, above the next one right
This
there.
one.
You draw
Yeah,
that all
that's
the way across, you can see it. That sort of is an area that if we get a close above that today, that could be an indication of that's where the support is and that's where your move higher is potentially. But
right here.
yeah, but
Yep.
actually going back and looking at history instead of the last, week, you
Yep.
start to see where these things hit resistance or hit support or create support. and they
Yep.
trade from it, especially in commodities, oil and metals and that kind of thing. So this is something I'm doing more and more work on, is looking back further in time and seeing where do things like especially energy trade from.
There's
And
natural gas.
yeah.
That was something else we got in right here. That crossed over the nine. So here we are.
Mm-hmm.
And if it touches up there, that'll definitely be a sell on the green line of death.
Yeah.
But you can see what a fall this was.
Yeah.
You know, how would you like to have bought in here and then not had the technical knowledge to get out?
Right. But
You
so
rode this all the way down.
so scroll back a little bit, like make so we can see further. Right there. Go from your left, far left, all the way. Just, I mean, felt like a weekend right there. Just you can see where it's like there's this channel or this support area. And once it breaks out of that, eventually chances are it's going to retrace that because historically it has. So I mean, it's not totally accurate, but it gives you an idea that this breakout that you saw around the May 1st of 2024 to the, was that to 200 became your resistance, and it just migrated right back to where it started from. And it's interesting, especially in the commodity world, where you
You
can
can you,
historically find these levels where they're just trading up and down.
so you can see though, here's a double top.
Yeah.
Okay. And that's why we saw this drop down. So, you know, basically on a double top, um, you would go from and look what it did. That's about where you I mean, isn't that just about perfect? I mean, this is what's so cool about technical analysis. You know, double top, you take that and that's what it falls, you know, right here.
Yeah.
We'll make this a little thicker so we can see it. But look where it went. I
Yeah.
mean, once you get into this, you get to know it a little better and you start seeing things like this,
Mm-hmm.
you know, you can see, oh crap, you know, and look what happened. You're double topped right on the 200. And the 200 is still descending along with the 50. So, you know, we may get back up, but it's got a long way to go to get past, you know, quite a few of these resistance levels. But, you know, we had a little bit here and you know, the next resistance is the green line of death and the upper Bollinger right here.
Yeah.
But we got some ways to go, but you can see what happens on a, you know, on a double top.
Yeah.
But those are the things you look for, and those are the things you see when you widen out, like you said, Trent. You can widen out and see more, you know, of what the past looks like, and make inferences about the future based on the past. You know,
Yeah. Exactly.
so
Exactly. Pretty crazy.
yeah. So I think that's probably enough boring technical charts for these people today, right?
I think so.
So we have you know, on the Discord, a lot of people will send in questions. Can you look at this chart or that chart? And I do my best to get back with them as fast as possible. And, you know, and we have watch lists. And this is what we do all day on, you know, on the Discord. We just go back and forth. And
Mm-hmm.
a lot of our members are really good traders and they're good at finding these things. And we just help each other out all the time. So, um, you know, that's what I love about the Discord. Plus, our Zoom calls are very informative. We have people from all over the country and world on the Zoom call, and with different perspectives of housing cost and labor cost, and you know, just price of bread and eggs and all that stuff. It's
Yeah.
really interesting to get that perspective in a real time way from regular guys like us. You know.
Exactly. And I think
Yeah.
that's the biggest part of um our program is the community. It is the interaction, and those who engage in the Discord or engage on the two Zoom calls on Friday, I think get a lot out of it. And that's why we're continuously seeing growth in Best of US Investors. And it's heavily driven by you, the subscriber. So sign up, be a part of this. So, well, I think that hits it for today.
Yeah.
And I think this will be an interesting week versus last week, maybe a little bit mellower, but we'll probably do another video tomorrow, so keep tuned. And like I said, those charts are based at 11:45 Central Time today. I'd like go back and compare to where the market closed versus what we put on there, because I think it'll tell you a lot about how this market's moving around. But in the meantime, from Mark and me, Trent, we will talk to you later. So subscribe, hit the like button if you like it, share it with a friend, and we look forward to seeing your questions and anything we can do to add more value to you. We'd love to hear it. In the meantime, have a
Absolutely.
great week.
Yep.
See ya.
And cut.